0.01 lots, 17 days, 1,844 trades, all profitable. Over 20% net return without guessing, without gambling. Just a simple EA, executing one plan over and over again. You don't have to believe it, but I'll show you how it works. Line by line, trade by trade. This is not a strategy video. It's about surviving the market with boring precision. And if you're serious about trading, this 30-minute video might just change how you trade forever. Why we don't chase perfect entries. Everyone dreams of getting the perfect entry. Buy at the bottom, sell at the top. Sounds smart, right? But that mindset could be the real reason you're losing trades. The most dangerous idea in trading? Thinking you need the perfect entry to win. It sounds strategic, but it's a trap. You wait for 2,912.30, but the market only dips to 2,913.20. You miss it, chase it, and buy at the top. One candle later, you're underwater. You don't have a strategy problem. You have an execution problem. The market punishes hesitation and panic more than bad entries. That's why we don't snipe. We hunt. We define a high probability zone, set our traps, and let the market come to us. Instead of risking everything on one perfect shot, we break our plan into dozens of small, smart trades, each one low risk, each one building toward the big picture. Sniper traders look cool until you see their results. 9 missed trades, 1 chase entry, 0 consistency. Zone traders? We're boring, but we eat well. The truth, perfect entries don't exist. But perfect discipline does, and that's where the real edge is. With our EA, you set the zone. That's it. The rest is mechanical, disciplined execution. No guessing, no gambling. Let's decode this real setup. Set to the lowest so we know 29.30 is the first parameter. The starting price. The closing profit here is the take profit price at 29.31. So the profit per trade should be $1. What's the price difference between these two orders? 1.5.28 USD, correct. Now look at this sequence. Continuing until 119. Since it starts counting from 0, the numbering 119 actually represents 120 orders. 120 total orders. Now, we understand how these parameters are set. Specifically, initial price at 29.30, 1 lot per trade, with a total of 120 trades, right? $1 profit per trade. And 1.558 USD price interval S. Let's proceed. Next up, I'll walk you through a real 17-day session using zone logic. 1844 trades, all in profit. No magic, just execution. Let's look at these statistics. Total of 1,844 completed trades, with every single trade closed profitably. That's a 100% win rate. Each position size was 0.01 lots. Consistent 0.01 lot parameter setting. FXCM's 1 lot here equals 0.01 lots elsewhere. It's just parameter adjustments in their backend system configuration. Don't interpret this as standard 1 lot trading. They're using whole numbers for cleaner display. That's the purpose. Now about this withdrawal amount. 79.038 means FXCM calculates overnight funding fees differently from other platforms. They include swap charges in withdrawal records. Positive numbers show deposits. Negative numbers include overnight costs. Let's talk about what happened after February 18th. The account entered during a volatile move. First, price went up to 2,956. then crashed down to 2,832. That's a drawdown of over 120. Most accounts gone, liquidated. But this one, still standing, still compounding. Why? Because every order was just 0.01 lots, 17 days, 20% gain, no emotional trades. This is why small lot sizing matters. It's not flashy, but it's the only way to survive volatility. You don't win by predicting, you win by surviving. From February 18th, the price broke above our top entry level, 29.30, for 6 days straight. This was the temptation phase. Many traders couldn't resist. They followed the market. They added risk. They changed their plans. But not us. Because the moment you expand your plan upwards, a sudden $200 drop could end it all. This is why we follow the plan, not the market's emotions. A plan must remain stable for a period of time because it's designed based on our own capital and our risk tolerance. You didn't fail by missing the move. You failed by changing your plan. The later part of the move looked tempting, but we stuck to our fish belly strategy. What does that mean? We don't chase the tail. We don't bet on the head. We just take the meaty, stable middle, the belly. It's where risk is lowest and discipline is highest. With 0.01 lots split across the grid, we absorb the volatility without stress. This segment alone delivered enough profit for the entire year. So why get greedy? The belly isn't the biggest, but it's the most tender. What you want isn't more, it's safer. Some viewers ask, if you don't follow the uptrend, what if it suddenly crashes? My answer, of course I'll lose too. But that's not a problem for when the crash happens. That's a risk you plan for before you even start trading. This is the essence of trading. Risk is what you can control. If not, the risk will control you. Profit? That's what the market decides to give you. You don't aim for more profit. You aim to survive. The market doesn't exist to make you rich. It exists to test if you can survive. Many traders think an EA can predict the market. But let me make this clear. A predictive EA doesn't exist. Any tool claiming 99.99% accuracy, it's a scam. Our EA doesn't predict anything. It's an execution engine, fast, emotionless, and obedient. You decide the logic, it just follows your instructions every single time. EA can't see the future. If you think it does, you're dreaming. Now, this EA made 20% in under 1 month. It cost $7.99, one-time payment, lifetime license. Too expensive? Then maybe you're not planning to stick around, because what matters is not the tool, but your plan. Tools don't make money. Discipline saves accounts.